The question in the markets for investors and for analysts is, why do you want Anadarko so much? Why not go for a Concho, a Parsley, an Endeavor instead?
Okay, I do want to correct one thing, that our offer today is the same offer that we made in January of 2018, because we felt very strongly, as we've looked at Anadarko over the past couple of years, that they have incredible assets. And combining their assets with our assets just further enhances our strategy of dividend plus production growth. We feel like the combination is very compelling. And what we saw in Anadarko is great assets, but the opportunity to improve upon their shale development in the Permian and the DJ. And in addition to that, really high accretion to cash flow. So the combination of those.
So to dig into that, it means that, say, a Concho or a Parsley that people talk about getting taken over, there were limited efficiencies that you could wring out of that you do feel like you can wring out of Anadarko. This is not just bigger for bigger's sake?
No, it's size is not what we're going after. It's really value. And when you look at some of the operators in the Permian, there are some really good operators in the Permian where if we tried to acquire them, it would be really difficult to even pay the purchase price or get any synergies at all. But with Anadarko, there were some opportunities, and we saw it not only in their Permian assets, the Delaware Basin properties, but also in the DJ. And we see opportunities to not only improve the recovery per wells, but also to decrease drilling and completion cost.
Right, as you said, this was an offer you had made in January 2018, and you've made some subsequent offers, I think, haven't been responded to. So obviously they don't see the same on the Anadarko side. They don't see the same value creation. What do you need to do to convince them that your deal is the right deal rather than Chevron?
I think it's to help them understand the synergies more. The synergies with us in the Permian, we're a proven operator in the Permian. Right now, we have 23 of the top 100 wells in the basin. And the other wells in the top 100 had to use 27% more proppant. So we're clearly on the subsurface modeling, frac design and completion side, far superior to some of our competition. And then on the drilling and completion side, we've been able to lower our drilling cost and improve some efficiencies around the way we execute our completions. With the combination of those two, we saw opportunities to apply that same process to Anadarko's acreage in both of those basins.
And as you come into the oil world of nerdiness, it's prop and sand, by the way.
Right. Well, so there you go. You learn something every day. So just thinking about the price as well, because obviously that is a big part of it. Your current offer is quite significantly higher than the Chevron offer, but it is a big stock component, 50%. We've seen the stock be under some pressure since the news kind of emerged that you might be around this. Would you consider putting a collar on the stock if that was something that helped get this deal over the line?
We think our offer is compelling enough, and we think the reason for the pressure on the stock is the fact that we have not been able to get our story out there. When the Chevron deal was announced, there was a leak that we were another bidder, and without understanding why we wanted to bid and what we saw in terms of the upside and the opportunities, our shareholders didn't know what to think of this. And so now we're finally able to get our story out and to talk about the assets and to talk about what we're going to do with them.
So that's a no? You wouldn't put a collar on?
Don't think we need to. The bid is just so compelling otherwise.
Part of it, you mentioned synergies. You're looking at like $3.5 billion in annual synergies, whereas Chevron's only looking at $2 billion. The rhetoric on the street is that they can increase that and match yours.
I feel very comfortable that we can achieve our synergies. Don't know what their numbers should be or could be, but I know that our performance in the Permian speaks for itself, and there's public data out there that indicates that, and I think we have graphs that show that we're recovering more per well than either Chevron or Anadarko on a 6-month cumulative basis, and so we're clearly a proven leader in the shale play.
And talk to us about the debt, because you are going to borrow quite significantly to do this deal. You've, I think, increased the cash consideration since the last offer. You'll be about 3 times levered to EBITDA after the deal. How quickly can you get it back down to a level you're comfortable with?
We'll get it down to less than 2 by 2021. Through asset sales.
Asset divestitures?
Yeah, $10 to $15 billion of asset sales. And we've had some incoming calls, so we're highly confident that we'll be able to achieve that goal.
What do you want to sell?
Can't tell you that yet, but,
But
the reason we can't disclose it is because once we disclose it, it compromises our ability to maximize value.
But I think the question I was more getting at is, do you want to diversify more than where you're at? As in, was this not only a Permian DJ Basin play? Was it you want to get into the LNG export world? Was this you want to get more into the Gulf of Mexico world? Like that's kind of what I'm getting at with that.
This acquisition was really driven by the cash flow accretion and the synergies that we know we can achieve with the 10,000 wells that we'll be drilling on Anadarko acreage.
Does going after a deal of this size, which is so transformational for Oxy, does it inevitably make you a target yourself?
I don't know. I can tell you that with what we're doing here and the value creation that we're going to be able to achieve over the next few years with this makes the value that we can deliver to our shareholders significant. So if someone wants to go above that, that's great for our shareholders.
Would you go to 4 to offer Anadarko? How much you really want it? 4 offers?
I think right now our offer is so compelling. It's $11 higher than their offer. I think that what we're going to focus on now is just making sure that our shareholders understand what we're doing.
Is there an oil price where this deal no longer make sense for you and the synergies are less?
No, when we look at oil prices, we always look at the $40 to $50 range. And we make sure that any decisions that we make would be successful in that range of oil prices. And if we do that, then over time, we'll always be successful and we can lower our risk.
Now, I know obviously at this point, right, you're going to be coming in friendly. It's going to be perceived maybe as a hostile, but you guys are being very nice in your rhetoric. But I do want to talk about the potential corporate governance issues here, because you'd been around this asset for a while. You had, as you say, you had made some offers. Those offers had gone unanswered. So were there concerns on the part of Oxy that this process was not being handled the way you would expect?
I just didn't know what was happening with the process, but I knew that we wanted to continue to try to get them because it makes the most sense for our shareholders. So I think right now where we are is we're excited about our offer. We're excited about picking up their assets and merging them into Occidental. We'll be a stronger company, and we just want to look forward and move on.
If you don't get it, do you need to go look elsewhere or no?
We don't have to buy anything, and that's the scenario that people need to understand about us. They need to understand that we have the best portfolio we've ever had in the history of our company, and we're executing well on that portfolio. Our employees are doing a great job. We have I think, phenomenal strategy. When you take all that and put all that together, we delivered in 2018 a return on capital employed of 14%, which is the best that Oxy's done since 2011 when oil prices were $95. So what we're doing today is great. So I hope people understand that because what we're doing is great, that means that this had to be incredibly compelling for us to want to do it. Otherwise, we would not have done it.
Well, it's a fair point, because it feels like when the leak happened, some of the rhetoric from the analysts and investors was, oh gosh, is there something that we know about your assets or your production that's not good? Because you always wanted to be the best, not the biggest. And so that's what the confusion was. So you can go alone without Anadarko. It's not like you're going to go look at a Parsley or an Endeavor?
No, it really takes an opportunity that's a significant scale where we think we have the ability to go in and achieve this level of synergies.
It's a very M&A-centric question, but there is some interest here in terms of you going up against Chevron, right? They're obviously one of the biggest players in the space. What are the risks of just going into sort of a big public fight with a company like Chevron?
Well, we compete with the majors in the Middle East and everywhere we operate. And sometimes we beat the majors, sometimes not. If you look at our operations in Oman, we just picked up 4 blocks in Oman, huge blocks. We more than doubled our acreage in Oman, and we picked up a huge block in Abu Dhabi, 1.4 million acres, which is the equivalent of our Permian Resources business. So we're competing with majors all the time. What we feel is, just back to your point, it's not size that matters, it's competency, and it's the ability to execute, the ability to deliver results. We have a reputation in this industry for delivering results, and we achieve what we set out to do. That's why we're a partner of choice in the Middle East. That's why Oman, the government loves us there. Abu Dhabi, we have a great relationship there. ADNOC has selected us to get that block. Oman Oil, we have a great relationship. We deliver.
What about the other parts of the deal that we haven't really talked about yet? Like, for example, mineral rights. Like, that's a juicy source of cash. Like, how did that help sway in any way whatsoever? What's the cash flow you're going to get from something like that?
That helps the economics of the DJ Basin. It makes it really very compatible, and sometimes in some areas greater than what's happening in the Permian. So having the mineral rights is really good.